Welcome back everyone, Andrew Moore here. So we've covered buying your first home in Australia, but we haven't covered building your first home in Australia. I've been getting so many questions from people asking whether I think building their first home is a good option given all of the government stimulus packages leaning in that direction at the moment. So today we're going to break down whether we think this is a good option for you guys to consider. Now before we get too carried away with talking about building and whether building's a good option, let's jump straight into the actual government assistance that people are getting at the moment in the form of stimulus packages and grants, and let's break all of those down for you. These figures all differ from state to state. I'm going to be using Victoria as an example today. However, if you're not living in Victoria at the moment, I'll have a link down below to each of the states so you can work out exactly what the government stimulus packages are in your area and see whether this is still going to work out for you. Now, first up, we have the stamp duty concession, and in Victoria, you actually won't pay stamp duty if you purchase up to $600,000 if you're a first home buyer. And if you spend over $600,000 and up to $750,000, then it is a sliding scale of how much stamp duty you will actually pay, but you're still getting a little bit of a concession there as well. And then we have the first homeowners grant, which in Victoria is $10,000 in Metro Melbourne and $20,000 for regional Victoria. Now, in order to qualify to get this, the property either needs to be brand new or it could be at least 5 years old, but it has to be the first time that it's selling. So when we're building a property, we're going to get either the $10,000 or the $20,000 depending where we're building. Again, this figure differs from state to state, so make sure to check the link below. And now we have the Home Builders Grant, which allows Australian citizens to build a principal place of residence up to $750,000 or substantially renovate your property where the costs are somewhere between $150,000 and $750,000 and the existing value of the property pre-renovation is not more than $1.5 million. Also, your income does come into play with the Home Builders Grant. If you are single and you earn more than $125,000, unfortunately you don't fit in the bracket. And if you're a couple earning more than $200,000, again, you won't fit in the bracket. Also, the final hurdle to jump through in order to get the Home Builders Grant is that you need to sign a contract between the 4th of July and the 31st of December 2020, and also after signing that contract, you also need to start construction within 3 months of that. I can see this being an issue where a lot of people think that they're going to be getting the 25 grand Home Builders Grant because they fit all the other criteria. They sign up with a builder, and unfortunately the builder doesn't meet the time frame in order to start construction, and therefore they miss out on their $25,000. Builders generally have quite a few projects on the go, and I've spoken with a few builders who are saying that now that these new initiatives have come into place, they're seeing increased demand for their services already. Because the Home Builders Grant is not really guaranteed because there are so many variable moving parts to actually getting the grant, banks aren't including this in your funds to complete when you're applying for your construction loan. Even though there's a lot of moving parts to this process on the finance side of things, building can still be a great option to get first home buyers into the market quicker than they normally could if they were buying an existing property. The hardest thing for first home buyers is actually to save up the initial deposit in order to get into the market. And because of this, most buyers will find themselves borrowing more than 80% of the value of the property. And when you borrow more than 80% of the value of the property that you're purchasing, you have to pay lender's mortgage insurance, or LMI as it's otherwise known. This insurance protects the bank in the event that you can't make the repayments and they have to sell the property, and they don't actually end up selling the property for as much as they have lent you in the mortgage. The insurance policy would cover the bank and pay them back any loss that they made in this circumstance. The higher the percentage of the value of the property that you're borrowing, so if you're borrowing 95% instead of 90% of the value of the property, the higher the LMI premium is going to be, so the more you're spending on lender's mortgage insurance. So even if you only get the first homeowners grant of $10,000 for Metro Melbourne, this is still going to add to your deposit, help lower the amount that you're borrowing for the value of the property, and therefore you're going to save money on lender's mortgage insurance. Now that we've broken down all of the government assistance and stimulus packages that are happening at the moment, let's jump into actually talking about building and whether this is going to be a good option for your first home. Because you can potentially get so much money in the form of grants and stimulus packages to go towards your deposit, and therefore put together an even bigger deposit for the property, this is going to save you a lot of money and also potentially allow you to borrow even more and therefore get a more expensive property. Based on the numbers I've looked at, if you're looking at a house and land package, you'll be able to buy a more expensive house and land package than what you could buy the same property for if it was an existing property. If you try and buy a house and land package which is going to add up to an end value of $700,000, or you try and buy an existing $700,000 property, you're going to find that you need a much higher deposit in order to buy the existing property than you would the house and land package. This is because of a combination of two different things. First of all, the timing of when you actually need to have the whole deposit ready, and secondly, the amount of money that you're getting from the government, which the banks will count in your application. Where I think building could potentially be risky for someone who's buying a first home is where you're buying land that does not have plans and permits already approved, and you're going to be responsible for getting all of those plans through council, getting working drawings done, engineering drawings. A lot of these things can add up to quite a bit of money, so you want to make sure that if you are buying a first home, in my opinion, that you get one where the developer is going to be doing all of this work for you. So that's my thoughts on whether you should build for your first home in Australia. Now, of course, all of this is my opinion. I've tried to break down the numbers as best I can, but it does differ from state to state, so make sure to do your own due diligence. But I think it could be a very good option if you're looking to break into the property market that little bit earlier. That's it for this video, guys. If you enjoyed this and you want to see more real estate content like this, consider subscribing, and I will see you guys on the next one.